G'day everybody, welcome to this weekend update for Australian and also for global stocks. This is going to be a fairly quick update because not a lot has changed from last week. Probably the only change is that gold stocks are looking even better than they did a week ago and a couple of weeks before that. So the signs still continuing to get stronger and stronger for gold. There's a bit of short-term weakness in markets because of a particular circumstance with a bank in Portugal, but I think that'll prove to be a relatively short-term opportunity. We saw a little bit of profit taking, and that's a good thing. So not a lot of change from last week. So just to quickly run through it, the S&P 500 index was down 10 points on the week, and as I said, it was really the market was primed for a bit of profit taking. What's going on in Portugal was as good an excuse as any, but I really don't think it was enough to trigger anything more significant than just a bit of mild profit taking. So overall, global indices still in pretty good shape. I'd be a bit cautious about Europe, however, just until we see how things settle there. Now on the S&P index, a pullback to 1900 is a possibility. I'm not sure whether that's going to happen or not because the momentum in America is just extraordinarily strong, and it's built on pretty good fundamentals as well. Now we're into reporting season, which started on Wednesday, and so far so good. There haven't been any negative surprises. So if the American reporting, profit reporting comes through as expected, then I would think that the index will probably take another move higher. If we do get a pullback, it'll be a good opportunity. It would set up much better buying than what we've got now. Just quickly look at Australia and then we'll go to the charts. The Australian index lost 40 points for the week, and it's really stuck in this frustrating range between 5,300 and 5,550. And given the valuations on the top 10 stocks, which is the four banks and Telstra and BHP and Rio and Wesfarmers, it's really hard to see what's going to drive it to stay outside that range because all those stocks really are pretty fully valued. So I suspect that the ASX 200 is going to stay stuck within that range for some time. This is the S&P index. We've been looking at this for a lengthy time now. You can see the red 150-day moving average is not flinching. It's not showing any signs of slowing down, and the index is almost as far above it as it ever gets. The RSI has pulled back just a little bit, but really there hasn't been much of a correction as yet, as we saw in January and then again in April. If we were to get a bit of a pullback, then pulling back to this 1900 level I think would be fairly appropriate. I think that would set up a much better buying opportunity. Just quickly looking at the NASDAQ index, you can see it's also has hardly corrected at all, so the money's still going into the technology area. And if we look at the Russell 2000, which is the small caps, there's been a bit more selling in the small caps, no question, but they're still not that far off their highs. Looking at Australia, you can see we're in this range between roughly 5,300 and the top, which is 5,550. Still way below the previous high as opposed to other indices, and you can see how our market index has really basically just flattened off, and we're just getting a series of tops here, and that's because basically the valuations are fairly well stretched at the moment. Moving on now to commodities, gold gained another $18 on the week. It's looking pretty impressive, but even more so than the price of gold is that gold stocks continue to outperform the price of gold, and they are also outperforming the S&P 500 as well. And that's typically the hallmark of the start of a new bull market. And the last four major bull markets going back to the mid-80s in gold have resulted in gains in gold of between about 85% and about 140%. Now, when gold goes up that much, then gold stocks go up a heck of a lot more. And I think the sign's looking pretty promising that that's about to happen. Silver is rising in tandem with gold, so that's again a good sign. We didn't see that 6 months ago. And copper steady at 325, and oil did drop back a bit, got up to 107 a couple of weeks ago, but I think the concerns over what's happening in the Middle East have eased a little bit. So crude oil back to 101. So let's have a look at those few charts. So we'll start first of all with a weekly chart of gold. So we're still within this phase 1 base. So we haven't broken into a new bull market yet, but as you can see, we've just had 1, 2, 3, 4, 5, 6 consecutive weeks where the gold price has closed either flat or higher. It certainly hasn't declined. And if we look at the daily, you can see it was a pretty positive week last week, gained on each of the last, in fact, every session, because it was only a 4-day week. So America, or gold price in America, looking pretty strong. Let's look at silver. Silver's also continuing to rise, and we'll just have a look at a couple of other charts. This is silver and gold plotted on the same scale from the same starting point. So you can see that silver has overtaken, the blue line has overtaken the price of gold. So silver has been outperforming since around about early June. And just in the last week, they're pretty much rising in tandem. But let's have a look at some other telling charts. The first one is the value of the S&P index divided by the GDX index, which is the major gold miners. And when the line is falling, that indicates that gold stocks are outperforming the S&P, so they're going up more quickly. So you can see we had a long period of time where the S&P index was doing better than gold stocks, but now that has stopped. We're getting a consolidation, and I think poised to start heading the other way. The other chart of interest to look at is the GDX versus the actual price of gold itself. And when this line was falling, as it was for a lengthy period of time, it meant that gold stocks were falling quicker than gold. You can see now we've definitely formed a base, and we've started forming higher highs and higher lows. So with gold stocks outperforming gold, I think that's certainly a very good sign of the start of a new bull market in gold stocks. This is the spot copper chart. You can see held steady during the last week or 10 days. So overall, from a strategy point of view, global stocks still outperforming the Australian market, no question about it. There is a bit of weakness in Europe. I believe it'll be relatively short term, but probably best to just avoid Europe at the moment. But overall, when you look at market opportunities, the most promising signs are certainly coming from the gold area. Gold stocks will always be higher volatility than non-resource stocks. That's just part of the game. But if you know how to play it with gold stocks, then there are some excellent returns. And members have had some terrific returns from a couple of Australian gold stocks just in the last couple of weeks. So a new bull market in gold just looks better and better all the time. Now there's an opportunity for non-members to consider joining our group, particularly if you want access to overseas stocks and the terrific opportunities over there. American stock recommendations are now included as part of our service, or if you don't wish to be actively involved in an overseas market directly yourself, then I have a structure where I can do that for you. So if there's any interest there, please get in touch with me. There's our website address, my email address, and always happy to talk to those who are active in the market. That's it for this week. Cheers.